Welcome to the U.S. Silver Market Channel, your independent observational node in the world of physical silver and its pivotal role in global finance and the U.S. industrial-military complex. Today, in this inaugural video, we're diving deep into why silver isn't just a commodity. It's the backbone of tomorrow's economy, and right now, it's at the center of a perfect storm that could reshape everything from your portfolio to national security. Let's start with a question that might keep you up at night. What if the metal powering your iPhone, your solar panels, and even the missiles defending our nation suddenly became scarcer than ever before? Picture this. Silver prices exploded by over 142% in 2025, smashing records and hitting highs around $82 per ounce, only to face wild swings in early 2026 as global supplies tighten like a vice. We're talking about a market where industrial demand is surging, inventories are draining, and geopolitical powers are wielding silver like a strategic weapon. If you're invested in tech stocks, EVs, or even the broader economy, this isn't just news, it's a wake-up call. Stick with me for the next 10 minutes and I'll lay out the raw data, the scandals, and the shifts happening right now. No hype, no predictions, just the facts so you can draw your own conclusions. First off, let's set the stage with the current state of the silver market as we kick off 2026. Silver isn't gold's poor cousin anymore. It's the poor man's gold that's exploding in value. As of January 2026, spot silver is hovering around $71 to $80 per ounce after a volatile start to the year, driven by massive supply deficits and unrelenting industrial hunger. Last year alone, silver outperformed gold with a 147% rally, fueled by its critical role in everything from semiconductors to defense tech. But here's the kicker. We're staring down a structural deficit. Global silver mining can't keep up. Projections show annual shortfalls of thousands of metric tons, with inventories in key vaults like COMEX and LBMA plummeting by over 70% since 2020. COMEX registered stocks are critically low, and LBMA holdings have followed suit, signaling a squeeze that's not just temporary, it's systemic. What's driving this? Let's break it down. On the industrial side, silver's conductivity, measuring a whopping 6.3 times 10 to the 7th Siemens per meter, makes it irreplaceable in high-tech applications. Think semiconductors for AI chips, telecommunications gear, and defense systems. Companies like Siemens rely on silver for electronic imaging and X-ray tubes, MRI coils, and lab equipment where its thermal properties ensure reliability and longevity. Over at Tesla, each electric vehicle packs about 1 to 2 ounces of silver in electrical connections, battery packs, and management systems, far more than a gas-powered car. Elon Musk himself has sounded the alarm on surging silver prices, warning that restrictions could hammer manufacturers reliant on this metal for critical processes. With EV production ramping up and solar installations booming, each panel needing around 20 grams of silver, the demand is insatiable, permanently removing silver from the market since it's rarely recycled from these uses. Now, layer on the institutional flows. We're seeing massive movements in physical silver within COMEX and LBMA vaults. Inflows hit records in late 2025, like 54 million ounces into London vaults in October alone. But overall, the trend is depletion. This isn't random. It's tied to macro correlations, like the ballooning U.S. national debt pushing investors toward hard assets. Silver velocity, the rate at which it's traded and used, spikes with debt levels, as hedging becomes essential in inflationary times. And geopolitically, that's where it gets intense. Trade barriers, sovereign mining policies, and tensions are mapping out a new battlefield. Escalating risks in the Middle East, U.S. tariffs, and global conflicts are boosting safe haven demand for silver, just like gold. Speaking of geopolitics, no discussion of silver is complete without China's massive shadow over the market. Beijing controls 60 to 70% of globally traded refined silver, and on January 1, 2026, they flipped the switch with new export restrictions. Only 44 companies are now allowed to export silver over 2026 to 2027, echoing their playbook with rare earths. This isn't just bureaucracy. It's an economic weapon, tightening global supply and sending prices into volatility mode. Analysts warn of deepened crunches, with potential deficits exceeding 5,000 metric tons if exports drop by half. Silver has stopped being just a metal, its infrastructure with geopolitical stakes, and China's moves could reshape supply chains for big tech, AI, and solar. But let's not forget the scandals that have scarred this market, reminding us why independent observation is crucial. Back in 2020, J.P. Morgan was slapped with a record $920 million penalty by the CFTC for spoofing, placing fake orders to manipulate precious metals markets, including silver. They admitted to manipulative trading, paying fines, restitution, and disgorgement, totaling over $920 million. Civil lawsuits accused them of rigging silver futures from 2010 to 2011, costing investors millions through practices like entering and canceling orders to deceive the market. And it's not ancient history. Rumors persist, with J.P. Morgan's historical dominance in silver futures often cited in today's volatility. 3 traders were even charged in 2019 for market manipulation. How are U.S. banking structures reacting to these soaring prices? It's a pressure cooker. Viral rumors in late 2025 claimed a major U.S. bank, quote, zero quote, from a silver trade, tied to massive margin calls amid the surge. The CME Group hiked margins on precious metals futures, causing prices to dip as leveraged positions got squeezed, wiping out traders with $675 million in shocks. Banks are desperate, with short positions equivalent to 5.5 years of production, risking a massive squeeze if physical demand keeps pulling. Speculation points to institutions like J.P. Morgan facing losses, though experts say a full collapse is unlikely. But the trading hits are real. Silver plunged in sessions amid suspicions of Wall Street interventions, but the upward pressure persists. Other trigger points? Look at the defense angle. Silver's now a defense metal used in Rheinmetall weapon systems and Siemens Healthineers gear. Geopolitical mapping shows trade barriers and mining policies in countries like Mexico and Peru affecting supply. And with Bitcoin, gold, and silver diverging in responses to inflation and risks, silver's unique industrial geopolitical blend makes it a wild card. So, what lies ahead for silver in this era of unprecedented demand? That's the question commanding attention from investors, manufacturers, and policymakers alike. Here at U.S. Silver Market, we don't speculate. We aggregate and synthesize raw data from COMEX, LBMA, trade reports, and more. We'll track the industrial nexus, institutional flows, macro correlations, and geopolitical mappings with cold, empirical evidence. We locate, verify, and present all available data to give you the full picture. We provide the data, we document the shifts. Draw your own conclusions. If this resonates, hit that subscribe button, turn on notifications, and join us as we monitor this critical market. What's your take on silver's role in 2026? Drop a comment below. Thanks for watching. Stay informed, stay ahead.